I think the issue is not about overestimating or underestimating. It's realism, and the integrity of our report speak for itself. We do acknowledge that non-OPEC supply had surged last year, and hence we adjusted or revised our numbers, and so also are the projections for 2018. But be that as it may, we had also revised our demand figures in line with global economic growth. You and I were in Davos when the IMF also revised their numbers to 3.9%, and we had revised our global GDP growth from 3.7 to 3.8%. And because of the relationship between global economic growth and demand and other factors, we also revised our demand numbers to 1.6 million barrels for both 2017 and 2018.
The strategy from OPEC and its non-OPEC allies led by the Russians has been seen as very successful to date. What do you see are the biggest challenges to the longevity of the success of that strategy?
We had agreed way back in December of 2016 when the Declaration of Cooperation was crafted that there was need for us to look beyond a rebalanced market. The market was in any event going to rebalance itself, but we thought that we should come together, both OPEC and non-OPEC, to assist the market to achieve an accelerated rebalancing process. But ministers, in their own wisdom, also decided way back then that we needed to see beyond that by working out a framework to institutionalize this partnership, initially of 24 producing countries, and we saw 6 additional countries come into Vienna on the 30th of November last year to pay solidarity and support to the Declaration of Cooperation. So this is work in progress, and we are confident that a global forum such as the Declaration of Cooperation will serve as an insurance against future severe volatility and downturn that we had seen beginning in the autumn of 2014 that had impacted severely on this industry. You had at this conference several of the IOCs, several ministers from different countries, all almost singing a chorus, taking stock of the fallouts of this severe cycle, the worst of all the cycles. And I think we have learned enough lessons, and we are beginning to put some building blocks in order to institutionalize this partnership, and we are receiving very positive response from particularly the non-OPEC producing countries. So all in all, we are pleased that this noble effort is paying, and we are on course to achieving our objectives in the course of the year.
One of the key objectives originally was getting those OECD inventories down to 5-year averages. That is seen as happening perhaps in the second, possibly the third quarter of this year. But what you're telling me is this deal goes way beyond that. So even when objectives are achieved, you don't see people putting extra barrels back on the table?
Certainly not. I think there is a consensus within the group that we will work out this framework, how we are going to continue to partner, whether in a deficit environment or an oversupply that we had seen. We have a common objective, Steve, and that is not only to restore stability, but to sustain it on a sustainable basis going forward. The IOCs, the service companies, the producing countries, including the consumers. You heard from the South African Minister of Energy, a major consuming country in Africa, all testifying to the need to maintain stability in this industry. Without stability, the global economy itself will be threatened.
And you were just on a panel talking about the volatility in the markets, a question that was addressed to you earlier on. We have seen the oil price come off. We have seen concerns about extra supply coming from non-OPEC, but we've also seen appetite for risk on instruments, including oil, challenged in the last week or so. Do you have concerns that other issues in the global economy, including falling stock markets, could hurt the level of oil and indeed hurt the production agreement?
Unlike in the first quarter of 2017, when we came into that quarter with an excess supply in the region of about 2.4 to 2.5 million barrels a day from both OPEC and non-OPEC, and going into a low demand season. This year is a different story. The implementation of the supply adjustments by both OPEC and non-OPEC at a record conformity levels of over 100% had shrunk this glut by over 200 million barrels. Now we are hovering around 100 million over and above the 5-year average. In fact, some agencies are even arguing that we have already achieved our objectives because of the changes on the baseline. Now, what happened last week in the equity markets and the financial markets, of course, did affect all other commodities, but you can see it's just a blip, and it's expected. So the fundamentals are so strong. We do not expect any hiccup along the way, similar to what we had or we saw last year because of this seasonality factor.
Is OPEC going to be, and I use the word loosely, fighting amongst itself, trying to sell the same barrels to Asian and emerging market customers as well? Of course, we are seeing emerging market growth in logistics, transportation, consumer demand as well. But do you see a situation where OPEC is fighting with US players as well, more aggressively going forward to sell to the Chinese and other emerging markets?
The growing concern, to the contrary, the growing concern now in the industry is whether we have enough capacity and whether we are ready and willing to continue to provide, to supply this market with this growing demand. You have heard from you have heard from BP in their panel that demand is almost outpacing supply at the moment. So it is in the interest of all producers, not only OPEC, to ensure that we remain reliable and dependable suppliers of oil, not only to the current global community, but for future generations. Therefore, we need to continue to invest. We need to recover the lost investments that we have seen in the last 2 years in order to guarantee future supplies to this growing demand industry.
And finally, sir, no concerns about appetite from some of the big domestic Russian players and others about wanting to be let off the leash and to produce more barrels? You think Mr. Novak and the Kremlin will keep them in check?
I have had and received assurances both from Mr. Alexander Novak and President Putin that they will remain committed to the OPEC, non-OPEC collaboration under the Declaration of Cooperation. And they have proved this beyond any reasonable doubt through their high level of conformity to their supply adjustments. So I think there is no concern here. We are all in the same boat. We have developed a bondage now over the past year or two, working together, and it is in the interest of both of us within OPEC and Russia, as well as other non-OPEC producers, to continue in this fashion beyond the rebalanced market.